In this S&P analysis, we will analyze the S&P 500 price action, examine the stock market sentiment and the stock market internal to see what the market is telling us. The S&P 500 had another wild week. It gave back all the prior week gain plus more before it recovered with a couple consecutive updates and finished the week modestly lower. On Thursday, the jobless claim report reported another 3 million people lost their job, bringing a total of more than 30 million unemployed. Then on Friday, it was reported retail sales dropped 16.4% in April, worst ever on record. Once again, the stock market reacted like these things didn't happen. Is this the calm before the storm, or the stock market is putting a lot of faith on a V-shaped recovery and the early availability of a vaccine? All the indexes gave back a bit last week. The Russell 2000 have dipped back below the December 2018 low and has rejoined the Dow Jones Transportation to be below the December 2018 low. Other than that, all the indexes are consolidating and setting up for the next move. Looking at the S&P 500 monthly chart, the S&P 500 is still well within the megaphone channel, and it is currently down 1.67% or 48 points for the month of May. Year to date, it lost 367 points or 11.36%, and it is 15.61% from its all-time high. From the weekly S&P 500 price chart, it showed the trend is still up. It ended the week with a modest loss of 68 points, slightly more than 2%, and it printed an outside bar candle. The daily S&P 500 price chart is showing a lower high and a lower low. This could be a sign of a downtrend. We will watch if the price will take out this low. If it does, then it will confirm the trend had changed. For now, the trend is neutral until this low is taken out. Before we look at the S&P 500 daily price action in more details, let's go analyze the stock market sentiments and the stock market internal to see what they are telling us. The VIX came up a bit from prior week of 27 to near the 32 level this week. Although the reading is not at a panic level, but it is in the fearful and cautious range. The put-call ratio had a roller coaster week. It dipped below the 0.75 on Monday, then it shot back up to almost 1 at 0.99, and then ended the week just under 0.75 at 0.737. The sentiments are indicating the market is on pins and needles. Looking at the internal, for the week there were 2 huge down days. On those down days, the up-down volume ratio was minus 3.5 and minus 7.3. In the daily advance decline, there were 1,595 more decliner than advancer on Tuesday's decline, and 2,459 more decline than advances on Wednesday's drop. Now in the latter part of the week, there was a couple updates, and the up-down volume was 2.1 and 1.3. Then on Thursday and Friday rally, there were 191 and 421 more advancer than decliner respectively. These 2 internal are showing the weakness in the market, strong selling pressure on down days and modest buying pressure on rallies. The NYSE new high, new low remains subdued. It did show a bit more new low on the turnaround Thursday. This should not be ignored. It's another sign of market weakness, showing there are still many stocks near the 52-week low. The NYSE AD line is getting weaker while the S&P 500 consolidating before it makes its next move. Continue to see lack of expansion on the number of new highs as the NASDAQ 100 index continue to trend higher. And the divergence on the AD line continue to persist. Now let's take a look at the S&P 500 price action in a little bit more detail. Before I continue, I want to thank you for watching. These videos take time to make, and I hope you find them useful and informative. If you like the contents in this video, give it a thumbs up. That will help me a lot. And if you're not a subscriber to my channel, click the subscribe and the notification icon so you won't miss any future video from me. If you have any suggestions or comments, please post them in the comment section below and share this video with others. We see the S&P 500 failed to break above the 608 retracement near the 2933 level, and it pulls back, dipped below the 50% retracement at 2791, and found support at this 127 extension near the 2763 level. Then it bounces back and got back above the 50% retracement. So what we will do next week is to continue to monitor to see would it be able to stay within this 618 and 50% retracement zone, and see would it be able to break out of this zone on the upside and come up and fill this gap here and possibly get back above the 200-day moving average. Then on the downside, if it is unable to stay at this zone here and it break below it, then we're essentially going to see would it be able to hold above this 382 retracement level near the 2650 or this 100 level here at the basically this swing high at 2641.39, and see what it finds support there to get a bounce. And if it doesn't, then we're essentially looking for this thing to pull back to somewhere around this 2300 level and possibly come down and test the March low at 2191. Looking at the S&P 500 ETF, the SPY. Remember last week, let me move this back here. Remember last week, the value area that we're looking at is essentially this area here. And the scenario on the upside that we're looking at was basically one of them is to come up here to tag the 297.97 and possibly move up and fill this gap here. Then the other scenario was this price channel, and we're looking for this thing to come up to the upper channel and then get rejected and come back down and test the 288.44, essentially the bottom of the channel. On the downside, we're talking about that if it's unable to break away from this value area, then we're essentially looking for it to pull back and see would it get a bounce when it come down to the point of control somewhere around the 282.40 area, and see would it get a bounce. And if it doesn't get a bounce, then we expect to see the price continue to move down to tag the value area low somewhere around that 275. And we could see that the price actually did that. It actually did a little bit of a look above and fail. So it peaked above the value area and it came back in. And then it just went right to that point of control and come all the way down to the value area low. As a matter of fact, it went lower than that. It came down to this high volume no before it found some support. Then we get a push back up. So now if we update the composite volume profile to include the latest prices, well, let me remove the price channel since the price booked to the price channel already, and that is no longer in play. So let me put in the highlight the value area here, the revised updated value area. So again, we're going to be looking at the upside scenario. One of the upside scenarios is to come up to this value area high and then get rejected back down and test the point of control. Once again, if it could not hold above the point of control, then we expect it to continue to move back down to the 275.63, the value area low. And the other scenario would be for the price to actually breaks out the value area and continue to move up, and once again try to tag the 297.97 and also fill this price gap near the 200 level. So now for the downside, if that does not occur, and for the downside, we're essentially looking for the price to come down to the value area low to see would it be able to get a bounce off of that. If it doesn't, and if it breaks, then we're essentially looking for it to come down to tag the 264.89 to see would it be able to find support down at this level. Or the other downside scenario is that basically come down to the value area low and then get a bounce and then pushes back up with the point of control at 282 as the intermediate target. And if it could get above that point of control, then we'll watch the price to see would it be able to move back up to the value area high. So those are the possible scenario. And essentially, we are still looking for the price to break out of this consolidation area or the trading band between the 291 and the 275 area. So in summary, looking at last week's price action, the S&P 500 had essentially went nowhere. Although there has been a couple big down days, but the market seems to be resilient, and the S&P 500 recouped majority of its losses quickly. The S&P 500 essentially have been trading within this range here between the 618 and the 50% retracement, between the 2933 level and the 2791 level for the last month and a half. And it's just a matter for some event to occur and it will trigger a move out of this range. Would the move be up or down? Well, from the market internal and the sentiment, I see more downside risk than upside. To me, I see only one thing that will make this market pop, and that is a vaccine. But the vaccine will not be available at least many months away. Sure, there could be some encouraging news on the progress of developing a vaccine, but that's still not certain that the vaccine will be effective until a proper trial. Now, on the downside risk, I see many. First is the second wave of the COVID-19 virus spreading caused by the initial reopening of the U.S. economy. Second is the escalation on the rhetoric between U.S. and China on trade. Third is the massive number of business failure. And fourth is more layoff result from the business failures and the deepening of the recession. So these are some of my thoughts. What are your thoughts on the market or the reopening of the economy? Are you looking for a V-shaped recovery? Share your thought in the comment section below. Thank you for watching and stay safe.